Welcome to ForexTV.com. Today is Tuesday, December 16th. I'm Kathleen Reddington with your New York Forex Market Buzz. The dollar is amidst a sell-off before the FOMC announcement. And now for a look at the latest headlines from the CEP News Desk. Consumer prices in the U.S. continued deflating at the steepest levels ever recorded in November. They were led by record declines in the price of gasoline. When gas and food prices are excluded, prices were unchanged in the month. Consumer Price Index saw its biggest monthly decline ever with a 1.7% drop in the All Items Index for November. The Eurozone Purchasing Managers Index for manufacturing fell to an all-time low of 34.5 in December. Economists had expected further weakness in the PMI, however, and were looking for a figure of 34.2 for the month, down from November's 35.6 level. And manufacturing sales in Canada fell for a third straight month in October, falling 0.5% from September to 51.5 billion Canadian dollars. Today we are joined by Todd Gordon of Forex.com. Hi Todd, how are you today?
Good, Kathleen. How are you?
I'm fine. Now we're all awaiting the Fed's decision coming up at 2:15. Do you think that this will be a last kind of cut before the Fed starts quantitative easing?
I believe that is the case. I think the bond market, especially with the action of the 30-year Treasury today, the long end of the curve, we're seeing a flattening effect. I believe that the bond market is well bid, especially with this morning's more than benign inflation data. I think quantitative easing seems to be the next step.
All right, and lower commodity prices such as oil and gasoline have really driven down the CPI for the U.S., and it will probably remain that way until we see them stabilize. Do you think we've seen a bottom, at least for gasoline and oil, or do you think this is just going to continue to be driven down?
Yeah, certainly not. If you just look at I don't know, a couple-day chart of oil, we just got slammed from $50, and we're heading into an OPEC meeting tomorrow in Algeria. OPEC is widely expected to announce a cut of 2 to 3 million barrels, and technically speaking, oil really hasn't gotten any kind of bounce, especially with the weak dollar move we've seen in the last 2 weeks. So I think trading right now, the futures market 44.10, 40 was a big breakout point back in 2003, so that's going to continue to be our focal point. 40.50 was the low print. You should look for buying in the 40 area. I've heard strike interest up around 50. But any break of 40 to the downside should continue to see that trend of commodity selling continue.
All right, and now the CPI, coupled with being right ahead of the FOMC announcement, led to a sell-off in the dollar. We saw the dollar-yen break below 90 at one point. Where is this pair going forward?
Dollar-yen, I'm actually, this very second, I'm long dollar-yen. I think technically it's a good level. I tell you, I'm just not buying into this dollar weakness move. I'm telling you, the story around the desk is September, October, November move, and the dollar was forced liquidations in dollar positions as the economy and the financial system deleverages. But all of a sudden, we're up 10 big figures with 2 weeks to go in December. I mean, how can we have a paradigm shift in a liquid holiday market such as we're in right now? I just don't see it happening. I just don't see deflationary forces abating. Perhaps we can go back to selling dollars on its own merit, but I just don't see such a fundamental shift in such an illiquid, underparticipated time as we have right now.
All right, and now the Fed is expected to make a 50 basis point cut. There were some little whispers about maybe 75, but how do you think the dollar will move once the Fed finally comes out and makes their announcement?
I think you're going to see, to go back and answer your last question and combine with the current question, I think dollar will continue higher depending on the language that we're going to get from the Fed in terms of quantitative easing. I think if the bond market is going to continue higher, that will drive dollar-yen lower, but we are trading right around 90. Exact spot price right now is around 90. So I think if the market is going to take it well, I think you're going to see probably a dollar-yen push below. There's a tight stop in dollar-yen right around 89.70. But so long as we hold 89.7 heading into the 215 announcement, I think dollar-yen could be in for a move back higher.
All right, Todd, thanks for joining us today.
Thanks, Kathleen.
This has been your New York Forex Market Buzz with Todd Gordon of Forex.com. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.